Jonathan Poland, coming to you from Washington, D.C. And you know what? This is one of my first videos about a specific company. I want to kind of go through it because I know somebody that recently invested in it because they know some of the family. And for me, I think it's important to really look at this company because in the beginning, I was like, oh, that's nice, a nice idea. But then I started looking at the actual business that I think they're doing like a, some kind of merger. I don't know if it's a SPAC or just a regular merger, but reverse merger maybe. But what ends up happening is, you have a company that shoots up like 800% in value or more, 8,000%. I mean, I think the company was valued at like 30 million. And now we're talking about a $4.5 billion company. So I want to kind of get into it mainly because we have a situation right now where it's very eerily similar to 1998, 99, 2000, my senior in high school, my first few years of college, where all you had to do was put a .com on the end of your company and immediately you would get shareholders. Immediately you had the best new idea. Immediately you had, the next best thing since sliced bread. So what's happening now is blockchain is becoming .com, right? Crypto, if you have a blockchain technology or you're putting money into crypto or you're creating a token that's this and that, next thing you know, your company is immediately garnering more and more shareholders, which, to be fair, they're speculating. Right? It's not an investment. Now, listen, I'm the first one to tell you I missed out on a whole bunch of stuff over the last 10, 20 years. And it doesn't pay to be skeptical all the time, especially when, you do see things that are going to come and really make a difference. And I'm not saying that HUMBL is not a good company. It probably is a good company. It's run by pretty smart people that seem like, at least it seems like they have a good mission, right? When you listen to the CEO, who's I think David Foote, right? The CEO, you listen to him talk in some recent podcasts. Sure, it looks like they have a great service that they're looking to bring to the world. I mean the world. I mean, they're not looking to just be an American company. They're looking to bring it all over the world. And maybe that's a good advantage, right? And, then you find articles, and I'm going to get into the actual valuation of the stock, but then you find articles here on Seeking Alpha. I would say go and search for this, right, if you want to read the article. But I don't know if this person, let's scroll to the bottom. All you got to do is scroll to the bottom, and they'll tell you whether or not they're a shareholder or not. Right, so they're long, all these companies, right? What is this? Okay, so they're also long Digibyte as far as a cryptocurrency. So they're speculating, right? This person wrote an article on Seeking Alpha, which is a very good site, by the way. You get a whole bunch of really good, well thought out articles, and I'm sure this is too. I mean, it looks like it's about 1,200, 1,500 words of well thought out, reasons why, right? Change my mind. Why I believe HUMBL is the next big thing in Fintech. But here's the thing. The idea that a company can just say that it's working on blockchain and immediately garner this type of historic rise. I mean, we're talking, the thing was valued at like 30 or 40 million not too long ago. And even that's probably too high, to be fair. But at least that was more in line with, the way things are going, even at a high .com valuation. At least it's in line with that. Because I'm going to get into this in a second. I want to show you specifically when you look at the financials and you think about things from a practical standpoint. This isn't a new idea. It's not a new, you're talking about, and we're looking at it right now. So let's just scroll down. So you're looking at HUMBL Pay, right? They're connecting consumers and merchants in the digital economy. Does that sound like anything else out there? Yes, there's a million pay apps like this. Great. Now let's scroll down. The HUMBL Marketplace, connecting merchants from around the world to online customers. Really? Because that's what 20 other places do, right? You don't need to do that, right? Square PayPal, Alipay. Hell, your local bank has payment processors, right? And they might be going away. Forte, there's a ton of them. Just go search payment processors, right? And then you have the merchant and financial services, which is very interesting because this is a company that looks like it's trying to put the cart before the horse, so to speak. Like they're trying to get too much done with, and maybe they can now that they have a whole bunch of capital. I mean, we'll get into what I think is going to happen with the shares, but maybe they'll be able to do that, right? But this seems like just a basic run-of-the-mill company that I could put together with 5 friends. So listen, if you have a small business that does $1 million in sales, and you're in the financial services industry, and you want to create a blockchain technology, hit me up. We can easily compete with HUMBL on a global scale. It's not a hard thing to do. So maybe I'm talking out my ass right there, but we're about to look at the financials of this business. Okay, so now again, I think HUMBL does do more than that. I want to see actually, right? Annual revenue of HUMBL, right? Not Humble Bumble. So you can't even find it, right? I mean, all you have is this. That's a Humble Energy. That's not even the right one, right? Humble Pay, right? Humble Pay. Here we go. Humble. That's still not it, right? Here's the thing. It's a startup. I mean, let's just call it what it is. We don't need to say anything else about it. It's a startup, and you know what? Let's look at this, right? Pre-register to become a merchant today. They don't have merchants. Sorry, CoffeeZilla is kind of one of my favorite YouTube channels, so maybe I'm channeling it. They don't have merchants, right? Yes, instant migration to the digital economy. There's a million apps that can help you do that. You can get a Venmo. You're done. It's not a hard thing to do. Okay, then you look at the marketplace, right? Feature, okay, so sure, you can go and you can buy stuff from, how many people do they have here? So these people are probably selling really cool stuff, right? You can shop this lady's products. She's buying some really cool stuff. I mean, she's selling some really cool stuff if you're into that, right? Look at this, the local branch, right? They're selling some really cool stuff. It's a startup. Me and you, business owner or just entrepreneur, you don't even need to do that. You can go to your local community right now, and if you have a cool website, you can call it whatever you want. You can have a cool little website called, johnpoland.com, right? Or whatever, right? That you can put up all the people in your local community, what they're selling, put it up on there, and just have people pay you through a Shopify. Right? At least Shopify provides you a nice storefront. And I'm not saying HUMBL doesn't. But again, they're too early in the game to garner a $4.5 billion valuation. Now, the final thing is the financial side. Right? So they're trying to make digital asset investing made simple. Now, here's the thing. Through block ETXs, which are crypto ETFs, basically. The thing is that they're not FINRA regulated. So they're doing this all overseas. You can't even do this in America yet. So, there's a real big problem with this company right now. And to be fair, I can appreciate what they're putting out there 100%. I mean, you're talking about a company that wants to go out and what they see as an underserved market, the emerging markets all over the world. They want to serve them with some digital assets, and they want to create a marketplace, and they want to help people pay, blah, 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 and they want to compete. I can't fault somebody for wanting to compete, but that's not what I'm saying. The business itself, no problem. If they want to build this company as a private enterprise, fine. You should have built it as a private enterprise. The moment you become a publicly traded company, you're going to get a massive amount of scrutiny. And they're about to uplist supposedly. So we'll see if that happens. I will be one of the first people in line to buy puts once they become optionable. And I'm going to tell you why, because here's what I think is going to happen with the stock. And I'm speeding up now because we're getting into the financial part of it. Now, look, here's Alphabet. Here's Amazon. Okay, so here it is. This is a company that they're merging with, right? It's a blockchain play, Tesoro. And let me see if I can find here we go, launches HUMBL Financial, HUMBL Studios. All these things were launched the time when they said they were going to be essentially completing the merger, right? Here we go. So let's just go through this, right? They sold warrants with $50 million in funding. So they basically bought the company with no money by issuing warrants to buy at a later date for a higher price to new investors. It's something that's been done for years, which is fine. It's a good way for companies to kind of get long-term shareholders, to be honest. But here's the real kicker. This company is at right now, is that a $5 billion? Yeah, $4.2 billion. It did $600,000 in sales. We don't even know what HUMBL's done in sales. Maybe it jumps to 20 million. I don't know. Maybe it jumps to 100 million. I will reconsider my position if that happens. But here's the situation. They have 3.9 billion shares outstanding with a B. There aren't many publicly traded companies with that kind of shares that are very successful. I mean, like we were just looking at Google. I think it has 300 million shares outstanding. You're looking at a company like even Amazon only has like 500 million shares outstanding. Very few companies have 3 billion shares or 4 billion shares outstanding. So what's going to end up happening is this. You have a company that's priced right now, stock price right now at $1.10, right? So what's going to end up happening is this. They're going to come out and they're going to do a reverse merger. Now what that means is they're trying to basically get the amount of shares outstanding to a lower number. Okay, so you have 4 billion shares. And what you do is you say, we're going to do a reverse split on the stock. So instead of splitting the stock and making more shares and then lowering the price so new investors can buy in, on the reverse side, you basically pump the stock price up and you cut the amount of shares you have. So if you have 4 billion shares and you say do a 20-to-1 price, split, reverse split. Now all of a sudden you have 200 million shares and your stock price is worth $20, right? So what ends up happening then is you can probably list on some of the national exchanges, et cetera, et cetera. You're still valued at the same for the moment. But then you face the scrutiny. And if the same financials apply, which I can't imagine they do, to be honest, I have to believe that HUMBL is operating with some amount of cash, with some amount of revenue, and some amount of EBITDA that makes sense. Because when you look at these numbers, revenue of 600,000, gross profit of 150,000, not million, 1,000. I can find 1 million companies that I can just go to and say, look, you guys are operating. Why don't we create a blockchain for your services or for your products? Or why don't, they're in the financial service business. Hey, why don't we create a blockchain technology and, help people do this? Why don't we just say we're going to create a blockchain technology and help people do this? There are millions of companies out there with these kind of financial demographics that can easily be converted into a new business model. So it's nothing special. And there are hundreds, if not thousands, of blockchain developers nowadays, especially Bitcoin and cryptocurrency is 10 years old. I mean, you just go to Freelance, Upwork, etc., Guru, and find them, right? And you hire them, they build you something, you're done, right? And I don't even know if HUMBL is operating on the ERC platform, which is a part of Ethereum. You can create something on there, with no coding required. I mean, so believe me, it's available. You just have to look for it and compete with it instead of getting caught up in the hype and the sizzle of today. That's the issue. So what ends up happening with this company is, I think, they're going to do a reverse split, reverse stock split. The stock's maybe it'll only be 4-to-1 because they want 1 billion shares. But let's say it's 10-to-1 or 20-to-1, right? So they bring the stock shares down to like 2 to 500 million shares, and maybe they bring it down lower, I don't know, and then they boost the stock price up to like $20. Okay, at that point, my prediction is that it goes back to $1 because it's not worth $20. Okay, so if they have options on it, when they do that, I will be one of the first people in line to buy puts. Let's just put it that way, because this stock is not worth $4.2 billion. It's just not. Now, granted, the service competing in the market, I'm very happy for that. I'm a capitalist. I very much enjoy when people go into the market and they're looking to compete with others and they're looking to serve the marketplaces, especially what it seems like they're looking to do is all over the world, right? So I'm happy for that. Good for them. They should be doing something like that, right? But we're talking about a company. Okay, so yes, HUMBL is being built. This is like, just read the language. It's being built. It's here we go. Become a digital merchant in one day, right? Will be coming to the following countries. Nothing's actually happening yet, right? This is, and the actual onboarding is something that you could build on a WordPress app in a day. So trust me, this company is not worth $4.2 billion. It may, as long as the financials are not $600,000 in revenue and $150,000 in gross profit, it may be worth $100 million or $50 million. But that's 80 to 90 to 95% less than what it's currently priced at in the marketplace. And again, that's why you don't want to get involved. So please stay clear of hype and sizzle BS like this. Just because a stock, and this is the lesson that you need to glean from all of this, and Tesoro Enterprises or not, right? The HUMBL or not. The fact is that if you go in and you look, and this is just Yahoo, this isn't even like a deep dive. This is a very surface level dive into the business. The 52-week change, it's up 784,000%. Are you kidding me? Okay, so let's say you bought into it at 0.001, which is probably 1/10 of a penny, and you maybe put 10 grand, and now it's worth a whole bunch. Please sell. Don't hold on to it. You just made a lifetime worth of performance achievement in a year. Please sell, because the stock is not going to stay at these high valuations. And even if it does, let's say that I'm completely wrong. I would be shocked if that was the case, by the way. But let's say that I'm completely wrong, and this thing goes from 4.2 billion to 42 billion. So it adds another 10x, right? Let's say that's the case. At least take off the principal you started with. Get some of the money out of there. Because every time I see something like this happen, it really, really bothers me. You think GameStop was overvalued at $400? This is ridiculous. Anyways, that's all. Please be careful. It's a good company. Possibly could be a great company one day, 5, 10, 20 years from now. But things aren't moving that fast, and there's a lot of competition in the marketplace. So please, be careful. Thanks for watching. Take care.